All right, in the $7 trillion commercial real estate market, there's a small niche of pooled funds that managers hope to invest in actual properties and turn a profit. But these so-called blind pools have been disappointing. Bloomberg News found that almost $1 billion worth of blind pool assets were withdrawn or postponed in the past year. Joining us right now with his outlook for these pools and for the broader commercial real estate market is Craig Leupold, president of Green Street Advisors. That's a real estate research firm. Craig, great to have you with us. Blind pools, do you like them, or are they just not a good idea?
Well, it's not so much the idea of blind pools that are bad. It's really sort of evaluating blind pools relative to the opportunities in the marketplace. The issue with blind pools is they're out raising capital. They don't have a core set of assets to begin with. So you have the load of one raising capital through an initial public offering, and then you also have G&A costs where you don't have assets in place. Instead, you have cash in place, and so you need to go out and quickly buy assets, real estate assets, commercial real estate assets, on the cheap in order to justify those costs. You know, the problem is that the opportunities do not look to be as abundant as people thought maybe 6, 9, 12 months ago as the commercial real estate market has started to stabilize.
All right. So, you know, you mentioned, I think, some of this, but I mean, in terms of the costs involved with blind pools, not as cost efficient as investing in a REIT?
Yeah, well, you know, blind pools, the ones that you've talked about are trying to come public as REITs. It's just that they don't have assets. And so through an initial public offering, you're going to have offering costs. Through higher G&A, you're going to have a load associated with those assets. So for every dollar you're putting into an investment in a blind pool, typically the load is going to be somewhere 10 to 14%. So you're going to have maybe, you know, 85, 90 cents going to work for you. The alternative is to buy stock in an existing REIT where, one, there may not be any costs, you know, assuming that they're not raising new capital. And if they are raising new capital through a follow-on offering, the costs are much more reasonable than for a blind pool REIT. In addition, you have an existing management team with a proven track record.
Right.
You have existing asset base, and, you know, order of magnitude, depending what REIT you're talking about, anywhere from, you know, $2 billion worth of assets to $30 billion worth of assets. So you have a pool of properties from which to judge your investment more specifically than you do with a blind pool REIT, where it's uncertain as to what assets you may own at the end of the day.
Craig, you've been tracking the commercial real estate market for a long time. Let me ask you, where do you think we are?
You know, it's interesting. I think the public perception and the press probably has it wrong a little bit. You know, people keep talking about, you know, fundamentals being weak and the next shoe to drop in commercial real estate. You know, we have our commercial property price index, which finds that, you know, commercial real estate values declined order of magnitude about 40%, peak to trough. But we think we think commercial property values troughed back in the middle of last year. Since that time, we think actually values as being transacted in the market today are up just about 10%.
All right, we got to run. We're going to leave it on that note. Craig, thank you so much. We appreciate you breaking this down. Craig Leupold, president of Green Street Advisors, a real estate